Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, registered investment advisors, family offices, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Rob, how was your week?
Week was great. Looking forward to a short week this week. I'm going across the border, a little Cabo San Lucas trip on Thursday, so I'm really excited about that.
Sounds nice. You want to get away from the nice California weather in the summer?
Yeah, that's exactly it. Would rather go anywhere else because the weather is so poor here. So yeah, I got to get out of California, maybe for a variety of other reasons. Probably not the weather though, but Cabo, a good second place when it comes to places to be during the summer.
It is nice there. I love the waves they have, right?
Yeah.
Swimming in the ocean with the big waves coming in, it's fun.
Oh yeah. So yeah, looking forward to that, but excited for another version of the five things. Got a lot of stuff happening this week, both in the market as well as at DKI. Just a preface, we've got a report coming out later this week on a new position. We talked about it and teased it a little bit last week in the version of the five things. So if you're not a premium subscriber, make sure to grab your subscription so you can be one of those first ones to read the report and hopefully get in on the position with us. Gary, anything you'd like to say about that? Don't give anything away, right? We want to obviously always maintain that value for our premium subscribers.
Yeah, we're not giving this one away. That said, I don't have a whole lot more to add than what we said last week. This is one of the best, highest upside positions or opportunities I've seen in the last 4 or 5 years. It is a lot like Shockwave Medical, where we made 70% on our money in about 3.5 months. It's another single product medical device or drug company with just enormous growth, a really good management team, and the balance sheet is in good shape. This is one of these situations where I don't think this is going to be a standalone company. 3 years from now, I think it's very likely they'll get acquired. And so, this is one of these things where I see the opportunity to make 3 to 5 times your money in the next few years.
Premium subscribers, be sure to look out for that. You guys will obviously be the first to be notified once that depth report drops. Uh, Moving to the task at hand, we have another version of the five things. I think we've had this issue in the past, but it looks like it's rearing its head back. The
Yeah.
disinflation issue is back again. We're talking CPI, PPI. Home Depot makes an appearance, Intel and Walmart. Gary, you ready to get into things?
Yeah, let's go.
Alrighty. Gary, thing number one, CPI breaks 3%, leading people to believe rate cuts are coming sooner rather than later. We've been talking about. Thing number one is CPI softens, rate cuts, quote, sooner rather than later.
Well, Rob, the people who favor the Federal Reserve having lower rates are referred to as doves. The people who want higher rates are referred to as hawks. And this CPI report had the doves very, very excited. People were looking for a repeat of last month's 3.0, 3%. And instead, we got 2.9%. And, 0.1% really doesn't matter. It shouldn't matter. But people tend to get excited around those zeros. Same reason that corporations will price something at 9.99. Right? It's not really different than $10. It's just a psychological thing. Seeing the CPI crack 3% on the downside got the doves really excited. The 0.2% monthly increase, it's not great. It's not bad. Certainly well within reason. The core CPI number that excludes food and energy, that was up 3.2% versus last year, also up 0.2% versus last month. These numbers are still a little bit high, but all in, there's no question we're looking at improvement here. And the word that everybody uses for this is disinflation. And what that means is we still have inflation, but the rate of inflation is coming down. So what that means is you're going to continue to see higher prices, but the rate of increase on those prices will be lower. For all you calculus fans out there, that's the second derivative.
I actually saw a great tweet this weekend or last Friday, I think it was, and said someone explained to me this disinflation thing. And the guy's response was 5 years ago, I gained 5 pounds.
Yeah.
A year later, I gained 10. A year later, I gained 15. A year later, I gained 20. Last year I lost 3 pounds, so moving in the right direction.
Yeah.
But Gary, we've been seeing a lot of headlines saying Feds beat inflation, they've won the war, now they should cut rates. Do you think they've beaten inflation, Gary?
Rob, I saw those headlines too. And I think the headlines are premature and silly and inaccurate. Um, First of all, I'm on record as saying the appropriate rate of inflation, the rate they should be aiming for is zero. The
Mhm.
Fed's mandate is stable prices, and stable prices encourage people to save and invest and build a better future. Higher inflation encourages people to consume. There's no point in investing. You just need to buy something before prices go up. So the Fed's 2% target is 2% too high and a CPI of 3%. And I do think the CPI is understated. It's something we've discussed at length on this channel. But even if you think it is 3%, and I don't, that's not 2%. So I think the number's 3% too high, but it's 50% above the Fed's target. Now, are things getting better? They definitely are getting better. But I think it's premature to declare victory on this. The other thing is, people are saying the Fed beat inflation, Powell should lower rates. The real issue right now is everybody's looking for the Fed to save us from both inflation and a recession. And the truth is, Powell and the Fed, they don't have control over this. The real issue right now is massive amounts of congressional overspending are what's creating the problem. That's what's driving inflation. The Fed is in a position right now where whether they raise rates or lower rates, we're going to end up with inflation. That's coming out of Washington. That's coming out of Congress, rather. So, look, I think the market is right in that we're going to see a September rate cut. A lot of people are saying 50 basis points. I don't think that's likely. I think, we're going to see a 25 basis point rate cut in September. I don't think that's the right decision, but it doesn't really matter whether I think that's good policy or bad policy. Our job is to figure out what's going to happen and then how do we make money from it.
On the record, DKI has shifted its position from higher for longer to rate cuts sooner rather than later.
Yeah.
Gary expecting a 25 basis point cut in September.
You know what,
Ki-
Rob? I reserve the right to change my point of
that's
view
exactly right.
when we get new data.
You would
I
be a fool. You would be a fool otherwise.
Right. I'm not locked into one position forever. When we get new data, when conditions change, we can change our opinions. And by the way, everyone listening to this, you should change your opinion. There are times you should be long, there are times you should be short, there are times you should be hawkish, times you should be dovish. This sounds like a folk song. Anyway,
Yeah, yeah, it really
I
does.
I've
I
written
think
the
we're onto
world's
something.
worst finance folk song.
There we go. That could
Yeah.
be a hit. That's what we need to take us to the next level, I think.
Yeah, exactly.
Thing number two, Gary, we're talking June PPI came in high. July PPI lighter than expected. Conclusion, rate cuts coming sooner rather than later. Once again,
Yeah.
thing number two, Gary, July PPI is below expectations.
All right. So the PPI stands for Producer Price Index. And the reason that matters, the reason it's important as a measure of inflation is the producers see these price increases first. If you're a manufacturer and you're a provider of services and your costs go up, you see that in the PPI first, the Producer Price Index, and then later, few months later, we see that in the CPI, the Consumer Price Index, which is what we all experience as inflation, or the PCE, which is the Personal Consumption Expenditures Index, which measures how much more people are spending. So, this is the precursor. And last month, we got a surprise. The PPI came in light. It was only up 0.1% for the month. The core PPI was flat versus the prior month. Expectations were for 0.2% for both. The annual PPI was a 2.2% number, that's respectable. Ideal would be zero, but 2.2% is well within reason. The core number was a bit higher, which came in at, hang on here, yeah, 2.4%, which was well below last month's 3%. So we're really seeing a lot of disinflation here. Again, the numbers are too high, but definitely getting better.
Overall, Gary, positive report for those looking to see lower inflation, lower Fed funds rate. One area of concern, though, that you mentioned was the increase in pricing for final demand goods. Tell us more about that. What is it? What does it mean?
The reason that matters is over the last couple. So actually, you know what, Rob? Let's go back a couple of years to the COVID related lockdowns. So everybody's,
Oh, please no, Gary.
sorry, everyone. Right, trigger warning. Don't we
Yeah,
need a trigger warning?
Yeah, can we get a flash
Right,
red
Andrew,
warning?
flash up a trigger warning for everybody. All right. So what happened was everybody's, sheltering at home, in their 2 weeks to stop the spread or slow the curve or, whatever
The
language
first
they're
2 weeks were very fun. I will say that. I had a
of
great
course.
time for those
Yeah,
first couple of
of
weeks.
course. Okay. So when that happens, demand for services plummets. Nobody's going, out to eat or, to concerts or anything like that. Nobody's getting on planes and staying in a hotel. But people built out home offices, they built out theaters, they built out home gyms, right? They're like, okay, if we're going to be locked in for a while, we might as well make our home nice. And, they had the money to spend. So what that did was that spiked the price of goods. Then the economy opens up and everybody starts going out, and we saw massive services inflation followed by, there was all this pent up goods spending, and now there was less demand for goods. And so over the last couple of years, we've seen very little inflation in goods, and the price of some goods has actually gone down. And we've seen high services prices. And this PPI report actually reversed that. We saw a monthly increase in pricing for final demand goods of 0.6%. That is enormous. That annualizes to more than 7%. And that's pretty unusual. And that was a huge reversal. It's also one that we warned about in last week's 5 things. We talked about, higher prices for automobiles and said, hey, if we start to see higher goods prices, the Fed is really going to have a problem because services inflation has remained very sticky in that 5 to 6% range. The interesting thing here is most of that huge increase in goods pricing was offset by a decrease in pricing for previously sticky final demand services. So we saw a bit of a reversal here. I don't know that that's going to continue, but it's potentially concerning for the Fed because they've had a hard time getting services pricing down. If we get higher goods pricing, they're going to be cutting it right into, huge amounts of inflation. And so, the only other thing that I would add, and this is relevant for both the PPI and CPI. Again, the conclusion here is I think we're going to see a rate cut in September. I think 25 basis points, not 50. But one thing that we're expecting to see is DKI has been talking for the last couple of years about how unreliable the employment numbers have been. And so, people say, hey, we've got this really strong economy. We have, great employment numbers. And we've constantly been saying, no, the employment numbers as announced are always great. But then a month or two later, they're always revised down. We're seeing rumors that they're due to revise the jobs number for the past year down by 1 million jobs, wiping out all these gains. So literally every time in the past year, you saw headlines saying the jobs number is good, they beat expectations, we had growth. That is all about to be wiped away in one massive, restructuring. And so, look, that data has been horrible. It's been inaccurate. And, I think what we're looking at here is now we've got a disinflation in the PPI in a huge way, some decent disinflation on the CPI, and we're about to see a massive revision of the jobs numbers. And, I'm going to let the political analysts out there figure out, is this good or bad for the incumbents or the upstarts for the election? On one hand, if you're the Democratic Party and you want to stay in office, you want to say, we've got the rate cuts coming and we'll have a stronger economy. And so this data helps the Democrats who will want a rate cut. But the other side of it is if 1 million jobs just got wiped out, all of a sudden the economic data isn't going to be looking great. And we could be getting, some sort of potential recession warnings right before the election. That's not great for them. So, it's kind of one of these on one hand, on the other hand arguments. If you have a view on whether this data is good or bad for Team Red or Team Blue, put it in the comments. I'm interested in your opinion. I'm not sure who this is helping right now.
Would love the discourse, and as Gary's always says, if you disagree with him, just tell him why. That's the only stipulation we have.
Yeah, and by the way, it's cool if you're listening to this and you're Team Red, you're Team Blue, that's fine. You're entitled to your point of view. You're entitled to your political opinions. But I'm interested in your view. Do you think this data, helps or hurts, the guys you're rooting for? I'm not on the other side of this. I'm just interested in what you guys think.
Yeah, million jobs is a big number in terms of revision. Moving thing number three, Gary, we're talking Home Depot, as we mentioned, ticker HD. They had a good quarter, gave some disappointing guidance, talking about higher interest rates potentially hurting the home renovation market. Gary, thing number three, Home Depot's guidance disappoints.
So, Rob, the reason Home Depot matters, besides the fact that it's a big company, is because they sell into the housing market. People who build houses shop at Home Depot. People who renovate houses shop at Home Depot. People who are doing renovation projects themselves, the DIY projects, they use Home Depot. So it's a really good way to get a sense of what's happening in the housing market where Americans have a lot of their wealth stored. And, on Wall Street, there's always one of these weird situations where a company reports a good quarter, but they give disappointing guidance. And that typically will take a stock down. So, as you said, the quarter was good. Their second quarter was fine. But their guidance was for a 3 to 4% sales decline through the end of the year. So, for the second half. And that raised, some market concerns about the economic outlook in the housing market, the home improvement market. That wasn't what people wanted to see. And that's generally not a sign of a great economy.
This quarter too, Gary, Home Depot saw a transition, small projects to larger projects. Generally, we see those small home projects, strong correlation with consumer strength for obvious reasons. What are you putting into that? What does that mean to you?
I think that's a really interesting point. So originally, Home Depot and Lowe's kind of started as like good places for DIY, the do-it-yourselfers. The idea was, okay, I have to tackle a renovation project. You go to Home Depot and you have an expert there. You go to the plumbing department and you talk to somebody who was a plumber for years. And the guy's like semi-retired, but knows plumbing really well and will say, okay, yeah, you need this part and put them together this way. And you'd kind of get a lesson and all the parts you needed. But then a number of years ago, they built out these really big contractor operations. They have a big contractor business. And so people who are professional contractors, people who are building homes, doing big renovation projects, they started to buy a lot from Home Depot. And so, what they're telling us is there was this transition from small projects to large projects. And, what you can take away from that is that the individual consumer is suffering a bit and the big contractors are, either doing big renovation projects for wealthy people with large homes or they're doing home construction. And so this goes right back into the theme that we've had all year about a bifurcated economy, where people are claiming that, oh, we've got this great economy, GDP is good, employment is good. And, we've been saying all year, no, the aggregate numbers are good because we have a lot of stimulus spending out of Washington. Most individuals aren't doing great. And that's what you would expect to see, where people are putting a stop to these small projects. And, if you need to do a bathroom renovation, you don't need to do it. You can delay that, right? This isn't a case where you've got a leaky roof. So I think that's what we're seeing. I think it feeds into a theme we've had here, about the economy we've been talking about all year. But it's certainly interesting and concerning. We've been doing this off of sort of splitting out the aggregate data, but Home Depot, they're seeing individual customer data. And so their point of view, I think, carries a lot of weight in this particular area.
Definitely. And also seeing that the July CPI increase was due to higher shelter prices as well. One call out there. Thing
Yeah.
number four, Gary, we're moving to Intel, ticker INTC. You're saying they've got a huge problem. Their last two generations of CPUs have been failing at a huge rate. Thing number four, Gary, is Intel's CPUs keep crashing.
So Rob, the way I ended up finding out about this was, my laptop.
You have an Intel?
Yeah, I have a couple of them. I've used Intel since even when I went to college. That was what I had in the computer I had in my dorm room, right? I've
Yeah.
been using Intel processors for decades. Um, and my laptop is 4.5, 5 years old, something like that at this point. And at some point I'm going to need a new one. I'm sort of looking to see what was out there. and started to see there are massive problems. Intel's 13th and 14th generation CPUs, particularly their high-end i7 and i9 processors, that's what you'd get in an expensive computer. These things have been crashing, and basically there is a power draw problem. There's a voltage issue where they're just taking on too much power and burning out. Now, Intel has a patch out to help unaffected chips, but either you get it in time or you don't. And there have just been far too many CPUs that have failed. And once they fail, it can't be fixed. Those chips are fried. Intel hasn't been great about helping customers whose computers have failed. It's not their fault. By their fault, I mean the customer's fault. This is on Intel. And what I'd love to see is for them to be a little more responsible, do some sort of, better recall. It would be expensive, but you got, 2 generations of processors. Also, shout out to AlphaSense. I do business with those guys. Through them, I've done a bunch of expert calls. I've spoken to a number of people who, just do phenomenal work in the tech space, in the chip making space. These are people who have been lifers in the semiconductor business, and they've given different opinions on this as well. But through AlphaSense, I've had access to some really high-end people to talk to about this problem.
Yeah, you mentioned that, Gary, in your takeaway in the written 5 things about kind of being split in terms of industry experts looking at this, either one side, end of point capability, and then the other, you talk about these Panther Lake CPUs that are coming. Are those going to save the day for Intel?
Yeah, and we got a really interesting divergence of opinions. One of the experts I spoke with, who, he was really impressive. He knew his stuff. His view was the x86 architecture has reached its useful end. That for people who aren't, following the tech market constantly, the x86 architecture is what Intel and AMD, their chips are based on that. And his view was, yeah, you're not going to be able, the only way you're going to be able to get more improvement is by drawing more power. That's not great for laptops, and why you end up with chips burning out. Most of the people have said, no, this is a fixable problem. It's a solvable problem. I think there's a lot of enthusiasm about Intel's Panther Lake 15th generation line that's supposed to come out next year. So about a year from now, maybe, maybe 5 quarters from now. I think it's interesting. I'm cheering for Intel. I'd love to see them fix this. All I can tell you is if I were buying a new computer today, I wouldn't buy anything with their 13th or 14th generation processors. I also, I wouldn't buy that Panther Lake line until it's in, computers for 6 months, 9 months, a year, and see how well they're working. If I had to buy a new computer today, I'd probably go with AMD, or at some point, we're going to get some really great options for ARM processors. Those are the ones made by Qualcomm that you probably have. Their Snapdragon chips are probably in your cell phones, or potentially Samsung's high-end lines use those Qualcomm ARM-based chips. And the interesting thing about those is because they've been optimized for mobile devices, they're really good at not using too much power. So potentially with those, you're looking at, buying a laptop and having, either a much longer battery life, like going from 5 hours to 15 hours, or alternatively, they could make the battery smaller, give you your normal 5 to 8 hour battery life, but make the laptop lighter. There are some compatibility issues with those, but I think they're sorting them out, and that's potentially interesting competition, maybe, 6 months to a year down the road.
Here, I feel like you might be one of those industry experts the way you talk about CPUs. So I like that analysis.
Listen, Rob, you spend all day on the phone talking to people. Eventually,
eventually osmosis, right?
Yeah, with Shockwave, I spent so much time on the phone with cardiologists and interventional cardiologists and advanced interventional cardiologists. I knew more medical jargon than I probably should have.
Very good. Thing number 5, Gary, to wrap up this week's version of the 5 things, we're talking Walmart, ticker WMT. They had an excellent quarter. But despite those strong retail sales, still expressing caution for the end of the year. Gary, thing number 5, Walmart's earnings and retail sales.
So you're right, Rob. Walmart's results were very similar to Home Depot's. They had a great quarter. Um, and by the way, so not only did Walmart have great earnings, and Walmart, again, as I think, the country's largest retailer, or physical retailer, you get a sense of their sales. You have a really good view on what's happening with the economy. And so, they had great sales, and the retail sales figure last week reported by the Commerce Department shows sales were up by 1% on a seasonally adjusted basis. The largest growth factor in those retail sales was in the auto sector, and Walmart's e-commerce business produced 21% revenue growth.
Hmm.
That's enormous,
Hmm.
especially, I mean, these guys have been in
Yeah.
the e-commerce space forever. Not as long as Amazon, but this isn't a new business for them. But like Home Depot, Walmart gave very cautious guidance about the rest of the year. I think, they're concerned about a slower economy and a consumer that's tapped out.
Does this, Gary, also speak to the bifurcation in the economy as well, to where, with higher costs of goods, inflation rising, lower income consumers being attracted to what generally is a low cost provider like Walmart?
Yeah, and I think if we combine a couple of things we were talking about just a minute ago, the picture becomes more clear. So, one of the reasons Walmart, I believe, had such a good quarter is because so many people are struggling financially, they want to go to the discount retailers, right? Walmart, their big draw, it's not beautiful stores, right? It's not like that you walk into their warehouse and say, this is like going to a Nordstrom's. It's low prices. And so a tapped out consumer, a struggling consumer actually can help Walmart. The other thing is their earnings benefited from food inflation. So, restaurants have gotten really expensive. Again, this week, more posts on Twitter or X about, one person, you go to Five Guys and it's $22, for like a burger, small fries, and a drink. That's expensive for fast food. Um, and so, with higher food inflation, more people are cooking at home. And so Walmart, part of their strong earnings was they had high food sales. It's a lot cheaper to buy food at Walmart than to go to a restaurant. On the other side, we were just talking about the retail sales reported by the Commerce Department. The big number there was vehicle purchases. And so, excluding that, retail sales were up just 0.4%. So more than half of the increase in retail sales came from car sales. And so, again, bifurcation, wealthy people are in good shape. They're able to buy cars and other expensive items. People who are struggling are going to Walmart and, cooking it at home instead of eating out. And by the way, there's nothing wrong with cooking at home. That's what I do most nights. I think it's healthier, and there's nothing wrong with saving money, and, being able to cook for yourself is fantastic. So, I'm in no way being critical of that, but it is a generally good way to view the health of the economy. And again, I think it feeds into our thesis on, bifurcation of the economy here.
That concludes, Gary, this week's 5 things, the disinflation issue for August 19th. Be sure to like, follow, subscribe to the YouTube channel. Visit us at our website, deepknowledgeinvesting.com. Again, we have a new research position being released later this week, I believe, Gary, with a new depth report coming out. DKI taking up another position that will be added to the current recommendations page. So again, if you're a free subscriber, you won't have access to that, but the ability to upgrade to premium will be ensuring you that you get that delivered to your inbox immediately. Gary, any closing thoughts on this week's version of the 5 things, or anything that you see upcoming in the market or the economy?
I think just 2 points, Rob. One is I think a 1 million job loss adjustment to the previous numbers indicates two things. One, the economy is not in nearly as good shape as people have said it is. And two, we've been saying these numbers are unreliable. And so, I think that's very concerning. The other thing is, on that new position we're adding, the report will be out on Wednesday. We spent the weekend working on it. I got comments from everybody, and final edits are in. We will be ready to release that for our premium subscribers on Wednesday. Like I said, this is something I'm really excited about. It's one of the best investment opportunities I've seen in the last 4 or 5 years. I have a huge position in it personally, and other DKI subscribers who know about it have also started buying it as well. So, that's something that, where I think hopefully we're going to make a lot of money together on that. Other than that, everyone, thanks so much for watching. We know your time is valuable. We appreciate you spending it with us. And, thanks. We'll look forward to seeing you next week.
Thanks, everyone.